You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again for TWIFO, This Week in Futures Options, a program where pretty much the name says it all. We break down the week that was, and in some cases still is, from a futures options trading and trending and volatility and skew and all that other fun stuff perspective. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get us by now. If you want the full kit and caboodle, the full archive going back 11-plus years on the old network, the website or our app are the easiest place to get all that stuff, to really do a deep dive. If you want the most recent stuff, iTunes, TuneIn, Stitcher, subscribe to the podcast there. You'll get it on your device of choice. And if you want it really in your ear holes the second we're talking about it, then you can join us live on Mixlr every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern. Again, via that Mixlr link, you see it out in all of our Twitter and all of our social media on the website. Grab it once, set it, and forget it. Follow us on Mixlr if you want, and you'll be notified when we go live. Not just with this show, but all the shows we do throughout the week. Vol Views earlier than this, Option Blocks. Did a Trading Tech Talk on that earlier this week. So all sorts of fun stuff hitting that live feed. A little fun bonus for all you guys out there who like your stuff immediate. And joining me, of course, by the way, however you listen live after the fact, make sure you hit us up. Questions, comments, insights, a lot of good ones coming into the show this week. We'll try to get to them later on in the show. And joining me to help me do just that, my cohort, my partner in crime for the world of all things futures options, Mr. Nick Howard, the founder of Bantix Technologies and creator of a little platform we like to use around here once or twice called Quick Strike. Mr. Nick, welcome back to the show, sir.
Yes, very excited this week, more than usual, for our special guest. So, looking forward to it.
Yes, I could tell your tone is above the normal low level here. I can tell that bit of excitement just sneaking into your voice there. It's hard to tell for the listeners, maybe, but I've heard him enough to know, and he's that extra notch of excitement. And he's excited because we are joined by a guest to help us tackle the week that has been out there and all things crude, and what a week it has been. We are joined by Tracy Shuchart. You may know her better from her handle over there on Twitter at ShyGirl. Tracy, welcome to the TWIFO program.
Well, thanks for having me on.
And Tracy, as we are wont to do with all of our first timers here on the network, why don't you go ahead and break down for our listeners a little bit of your background in the space and how you came to be blogging and tweeting about the crude oil futures markets.
Well, I was actually, I sold medical devices in California, medical grade plastics. And I decided, exciting, I decided one day that I hated my job, and I literally packed everything I had, quit my job, and moved to Chicago to get in the industry. And just went and knocked on doors basically until I got like a total boiler room to hire me. And I started as an options broker for futures.
So from medical sales reps, you just decided one day, I want to dive deep down the rabbit hole of listed derivatives. And so you got into options on futures. And was there a particular product area that you specialized in, or how'd you get lured to the dark side of crude?
Actually, it was because, I was a broker, right? So basically you're just calling a million people a day and then asking them to give you money to trade options. And so my first winning trade was a crude trade. So that's how it became what it became.
Pretty good. Well, you got to start somewhere, right? So
right, exactly.
Yeah. You remember the first winner, and you forget about the losers as quickly as possible if you can.
Right. Well, my background is also in Middle East studies, so it all kind of fit together.
Oh, there you go. That works.
And so, Tracy, you obviously worked as a broker, and you made that first crude trade, which set you on your path for life. Are you pretty much now spend most of your time, managing your own crude trading, or I know you spend a lot of time tweeting out a lot of information about the crude markets. Are you spending most of the time managing your own money, or what are you up to these days?
Yep, exactly. I trade for myself in my own account. So kind of made the progression throughout the years. I worked on the trade floor for a while, and I worked at a prop firm, and then eventually now I'm on my own.
There you go, moving all over the place, hither and yon. In fact, I know your handle is Chai Girl, but did I see you're actually coming to us out of Quebec? Is that correct?
So yeah, I'm in Montreal.
So a little Chai Girl remote, I suppose.
Chai Girl remote, exactly.
I like that. Remote Chicago by way of Montreal, a well-known connection. Well, let's get into it. Let's get into all things crude. That's the reason you're on the show this week. Of course, obviously it was a hot week for crude. A lot of stuff going on in terms of the net market. We saw actually futures out there in Rally Homo. By the way, you guys can play along with the show as always. CMEgroup.com/TWIFO, TWIFO. That allows you to look at all the reports that Nick and I are going to look at throughout the show. If you're listening after the fact, I know a lot of you are, then on the podcast, make sure you just change those settings so you can see it for today, for Friday, so you can see exactly what Nick and I are looking at here on the show. And spoiler alert, it was a strong week for crude with the futures settling out WTI right around 67 and a half, up about 8.5% out there on the week. So just rally ho mode. Maybe this is all you guys have been writing in for weeks and months, saying, when are we going to get this big move? When are we going to see crude vol coming back? Well, spoiler alert, you got all of that this week and more. Big move to the upside, big move in vol up pretty much across the board, multiple handles depending on where you're looking on the term structure, obviously. But vol just, shall we say, getting up there again, which is, I think, a welcome thing for a lot of people. Certainly paying the rent, as Nick would like to say, out there in all things crude. So, Tracy, obviously, this is the market that you watch quite a bit. There was a lot of mixed signals this week. There seemed like there was going to be a net. There's going to be some bear net. The data seemed kind of bearish, but then of course macro events have a way of intervening, and they intervened to the upside. So tell us what your take was on this week's kind of price action out there in WTI.
I mean, basically, what we kind of saw is basically macro events taking place, which is, generally crude is not necessarily. I mean, geopolitical risk is always factored in, but we had the trade war thing going on. So we saw, crude take a dive a little bit, and then, then we had war. Then we had a lot of geopolitical risk in the Middle East, sort of a Middle East contagion happening, and basically hasn't let up since then. So, when it gets to a point like that where you have these overwhelming macro factors, things like the report don't really matter that much. On another, usually you'll see a lot of reaction on those report rise. But yes, that report was very bearish this week.
Yeah, it seems like usually the narrative for crude when we're talking about it here on the show is a little bit of a push-pull between the OPEC numbers and the domestic production numbers, what we're doing in terms of supply here in the country and demand versus what OPEC is producing. And it seemed like those numbers were kind of leaning one way. And then, like you said, the macro kind of intervened. We saw global supplies coming out of OPEC numbers actually climbing. That's on top of rising output from non-OPEC producers, so that should usually lead to bearish settlements. We saw the EIA, a higher move for U.S. crude stockpiles. So all of that would probably usually trend towards, like we said, a bit of a bearish week. And then, bigger than expected stockpiles, 3.3 million barrels out there for EIA. And yet all of a sudden, it's like you said, macro has a way of intervening. We've got Saudi Arabia fielding off multiple missile attacks, shooting those things down. There were talks before about some, attacks on some of their tankers and other things like that. Then, of course, the escalating tensions with Syria and everything else. All of that combining to just add to the hodgepodge of volatility that is the Middle East. And when that kind of stuff happens, it ends up, you said, trumping the other data that's going out there. It ends up on the week up 5.5 handles, or about 8+%. Nick, it's been an interesting week to watch crude before we get into the options and the vol and all that fun stuff. What was catching your eye out there in this kind of topsy-turvy crude week?
Well, I have a question for Trace, because I'm always wondering what the people who, Trace, my background is I was an options trader in the rates and stuff like that. So I'm new to the commodities and over the last few years, but just been more, an observant person as opposed to a trading person in those spaces. But, the one thing Mark and I are always talking about on the show is people, they want crude to rally, right? That's all you hear. When are we going to see a rally in crude? Do you really care? I mean, I would imagine you don't really care. I mean, do you sometimes, when you're scalping, do you prefer to have these sort of predefined ranges, or would you rather be generally bullish or generally bearish when you're trading? I mean, what's the best environment from your standpoint?
I mean, generally, traders usually have one side or the other they like better. Personally, I like the short side better of trading anything. But, ideally, because I swing trade and I day trade. So when I swing trade, it's great to have like these great moves. But when you have, what we've had this last week where you're just straight up and the market's not breathing at all, it makes it very difficult to day trade that kind of market. So I don't like a completely one directional market either, whether it's up or down when I'm trying to day trade. But generally speaking, I prefer the short side.
Yeah, I think in general, well, I don't know. When I was trading options, I was more biased towards long gamma than short gamma. So that means I had a tendency to be long. But I recognize the fact that typically the better way to make money more times than not was from the short side. And I'm always questioning why people would want a commodity to rally that costs us more money in the end. So that's why I like seeing.
No, I mean, I think it's ridiculous that this rally, but you know, I'll trade both sides. I mean, I'm going to trade what's in front of me. So, but my preference is a short side, and I think we're overpriced right now.
Tracy, you mentioned you day trade and you swing trade. Walk us through a little bit of how you do that. Are you mostly, you said you like the short side, so I'm assuming you like the futures. Is it pretty much predominantly WTI futures? You sling a little Brent, and also is it all pretty much futures, or do you do the options on occasion too? You said you initially got lured to the crude oil dark side with brokering on the options. So do you do a lot of options out there?
I definitely incorporate options into my trading, absolutely, especially if the market gets too skewed one way or another, then I'll start, adding puts or calls depending on, whether the market's up or down. Or if I'm in a position and I feel like I need to hedge myself, then options are great for that too, obviously.
So you use options for hedging, and you said you also will use them maybe to augment your futures position, that sort of thing. So if you think it's going to rally, but you want to do maybe save a little outlay, you go with a call. Is that your typical use case?
So yeah, I mean, I'm usually either, if I'm in a major swing trade to kind of, except for last week, there tends to be a lot of volatility. So you can use options on the opposite side of the trade that you're taking. You know what I mean? Because
to collect some premium.
I can't trade against myself in the futures market, but I can trade against myself using futures and options.
Okay. And what's your typical time horizon? You like to trade the weeklies? You trade them intraday? Or are you a little bit longer? What's your time horizon when it comes to the options, particularly?
Actually, it really just depends on the product. It depends on what I'm doing. I mean, when I day trade them a lot when I'm expecting some sort of a big move. Then I'm just in and out on a day. Otherwise, if I think, if I'm using them next month, I think crude's going to be down $3-4, then I'll, get something more in the money and hold them. It really just depends on the kind of strategy that I'm using. But I flip options during the day as well. Like I said, it's a way to kind of trade against yourself.
Sure. Well, Tracy, I have one more thing to ask you too. So another thing we discussed quite a bit, we do talk about crude probably more than any other product on the show. And since you are trading options, have you ventured into the weekly stuff, the real short dated stuff, or do you tend to stay in the regular monthlies?
I stay I like to have more time, and they're just not as liquid yet as I would prefer. Weeklies. Right. So I mean, they're rather new, and they're just not as liquid. And with crude, I think that I find that I like having a little bit more time
to get the move in place that you would.
Yeah, because using a weekly, I mean, crude. You could think crude's going somewhere. It could take over a week to get there. At other times, it could take a day. You never know. So I just like to have the time option.
Okay. Well, that's sort of interesting from somebody who uses them very practically, right? We think that we obviously see that the open interest isn't as good, and sometimes the markets aren't quite as tight, but if it's the case that the end user wants to make sure that they have the ability to capture where they think things are going, then it makes sense that we're not seeing so much volume in the shorter dated ones, right? Because what it ends up being is you'll get 7 days to expiration on a regular contract they'll trade like crazy, but then a 7-day weekly you won't see any action. So I guess that once they get tighter markets and a few more participants on the market making side, maybe we'll see those finally reach their potential.
Yeah, I mean, I definitely think that, and I've talked to other traders too, and, we've all said the same thing. And, if they get a little bit more liquid, then I think that, I think people will sort of participate a little bit more. I think people are kind of just waiting right now. It takes a while. You introduce a new product, it takes a while for people to get used to that. People are used to doing what they usually do, right? So.
Yeah, I always like putting to the guests the questions that we get all the time from our audience, and on the crude, we get a couple of those. Nick and I have kind of asked and wondered for a long time why the weeklies never really took off. We've asked just about every guest we've had different CME people on talking about why that is, but people will trade the monthly contract all the way down till it's about to expire. So they will trade short duration crude options, just not in the listed weekly contracts, which kind of makes us wonder whether it's not more of a systemic thing. The brokers aren't doing a good job of surfacing these or something along those lines, because people will clearly trade short duration crude contracts, but for whatever reason, not in the listed weeklies, only when the monthly gets down to that range, which is kind of weird. And the other question we get a lot is, crude, what's the use case for options, intraday or longer term. So I always like to hear what people have to say on that front as well, because, Nick and I have waited on that a bunch of times. I'd like to get a diversity of opinion. Speaking of diversity of opinion, Tracy, I know you were talking recently about some article out of the Times of India there, where the Moody's folks going out on a big limb saying that crude is going to be between WTI going to be between 45 and 65 range for the foreseeable future. Of course, we're outside of that now, so I guess that they've already blown their range, so maybe they should have been a little bit more optimistic. But I know you had some thoughts on this article. You thought it was pretty interesting. You think that range has some teeth to it, as wide as it is?
Well, I think that, I think that what we're going to see, I got some backfeed. I think, if we go to like 70 or something, I think that'll be brief. I think crude's kind of found its equilibrium, in this sort of, $60 range. So I kind of expect everybody's kind of happy with that. Producers, it's not too expensive. It's not, it's kind of found its base there. So I don't think for the foreseeable future, but for right now, unless, something drastic changes, I think any spikes kind of above this range will be probably limited and brief.
Well, Mark, we joke about it all the time, Tracy, a while back. I don't even know how long ago it was now. It was probably inside of, I don't know, maybe 8 to 10 months ago. I don't remember when Citi came out and said crude was going to be between 40 and 70. So we finally got to the high end of their range here. So they were right. It just took them 8 months to get there. Because we always laugh at because from my perspective, just being more options oriented, and I know you look at the same thing because I see some of the stuff you tweet out of Quick Strike. You're looking at the open interest too, because you're looking for sort of support and resistance from that kind of from that perspective.
Exactly. I want to see where's the, I kind of use, as I kind of use it for OPEX, trying to figure out kind of what range we're going to be in and where we're going to end up for OPEX. And then I just use it in general to kind of, I look at it almost daily just to know where people are positioned, what positions are, what the OI change is, where are people moving around, just because I think it kind of helps you have a framework of, kind of the range that you think this particular month is going to trade in. Now, that isn't always the case, but it's good to know where other people are positioned.
Yeah, for sure. I agree. And that's kind of how, again, not being a technical chartist or anything like that, I'm just sort of watching where the activity is there. Some of the other things too that you can do with that, which you may not have seen and or that are available, is you can look at that open interest from a Greek standpoint too. So you can actually tie the open interest.
I just saw that.
Yeah. So how many deltas are around it, or how much volatility, how much vega is there. So I think that might be another way to get an idea of like how much something's going to get defended at that price, that kind of stuff. Yeah.
Exactly. No, I just saw that on the site. I think it's fantastic.
No, that's good. And the other thing we're trying to do, and I think will be helpful, and we haven't had the time to do it, but a lot of time, for instance, Mark and I have talked about trades in like gold, for instance, and we look in our charts mark the max strike, the max OI in a strike, but if something traded 18 months ago on some whim of a trade, it's kind of misrepresents that strike, pretty aggressively. So we're in the process of doing an aged OI report. So you can sort of kind of limit and say, well, how much of this OI is in the last month? How much of it is, et cetera, right? So you can go out, and that way really gets you an idea of what it's just another way of looking at not having to track the change in OI so much, but just looking and seeing how much has been opened very recently. So hopefully those kind of tools will help people, because you're and this is why we wanted to have you on, because you're sort of a testament to the people who make their living with futures, but the fact that options have answers for futures traders as well. So there's really a lot of range type stuff. There's really a lot of, because if there's an open interest on a strike, people are defending their positions by scalping the gamma at that point, or, selling futures or buying futures because they think they're in trouble, that kind of thing. So that's really the biggest thing to tell people out there, is that you can use that kind of information to do your job as well.
Yeah, absolutely. I mean, you don't need to be an options trader to find it's beneficial to look at options information and where people are, because a lot of those positions are tied to futures positions.
Right, and that's the other thing people forget. So anyway, Mark, that was really where I wanted to go with that. I wanted to see what she had to say about that. So thank you very much. Again, thank you for being on, because it's I was so excited when Mark said that you were coming on. So I was just really, really glad to have you.
This is Nick in giddy little schoolboy mode here. So yeah, you can't tell, but he's very excited through his that's his excited tone. That's as excited as it gets. But yes, he is an excited camper. And you're right, Nick. It is kind of a fascinating thing. A lot of our audience out there are futures traders who are maybe thinking about dipping their toes into the options. And they have a lot of these same questions. What can I use options for? Where we talk all the time about the vol, open interest strikes, what the skew is indicating in terms of where the options are leaning out there. And we'll get into that in crude in a second. But still, it's interesting to see, the different use cases people have for the products and the time frame. And again, why nobody trades the wheel. It's always this catch-22 with the new products, whether it's a new product listed off of an existing popular one like WTI, or a brand new product. There's always that catch-22. People are always waiting until the volume before they start trading it, but you can't get any volume until people start trading it, so things are always wide. And so it is this weird thing. But I think you're probably onto something, Nick. I think it is probably something to do with the brokers not putting the quotes out there, not making it easy to trade the non-serial months out there, contracts out there, something along those lines, because people will trade near duration, near term crude, just not apparently in the listed weekly. Speaking of what they're trading out there this week, let's get into the old TWIFO report this week. Again, cmegroup.com/TWIFO for you guys to play along with for yourself. And it was an active week. Crude open interest up nearly 6.5% overall out here this week. And of all the action, about 40% or pretty close to it coming in that front May contract, doing the lion's share of the action out there. But ironically, even though that was the busiest month, the number one strike, the biggest trade out there, the number one strike with a bullet out there this week, actually wasn't in the May. It was in the June contract. It was the June 60 puts, doing about 32,000 contracts this week. The lion's share actually coming on Wednesday, about half of that, about 16,000 going up on that day. The rest kind of scattered throughout the week, 7,400 on Tuesday. A net pretty strong opening, too, about 12,000 contracts. So actually on a week where we rallied away from the strike, we saw a lot of opening out there. Of course, that strike was imperiled earlier in the week, or maybe closer to it than it is now. So we could see a lot of action. It's not surprising why we see a lot of action around these even number strikes, and a lot of opening in this case out here on the 60 puts. And we got on number two, a little bit more farther away put. We have, even though it's closer in duration, it was the May 65 puts, doing nearly 30,000 contracts for our number two contract, with about 12,000 going up on Wednesday. The rest kind of spread throughout the week. Not much on Monday, only 18 contracts going up on Monday. So pretty much rest of the week lighting up out there on the 65 puts in May. A net about 8,000 contracts opening. So again, strong opening on the put side on the 60s and the 65s in two different months, in June and in May. And then we drop off a little bit to number three, the 64 puts, 26,000 roughly going up there. Also in May, about almost 11,000 going up on Monday. The rest, again, kind of scattered throughout the week. 6,500 going up today. So pretty robust action up there today. About 6,000 contracts net opening on the week. So again, a lot of strong positioning out there. It's just like a put palooza out here in crude WTI. 24,000 of the nice little put strip in May. 62 puts also active. 24,000 of those. The lion's share actually coming on Tuesday. 8,200 there. 6,700 on Wednesday. The rest kind of spread out throughout the week. Actually slightly closing, pretty much unched from an OI perspective. So a lot of back and forth slugging it out there on the 62 puts there in May. Then we got to jump back actually to we got a couple vying for the next spot on our list. In particular, the 68 calls also in May doing about 24,000 contracts, 7,000 going up on Wednesday, 5,000 today, so pretty active today. Again, a bit of a slugfest out there, pretty much unched from an OI perspective. So clearly a lot of action back and forth on that strike, and pretty much tied with about 24,000 contracts also out back again to June for the June 70s, rounding out our kind of top five here. Also getting a lot of action. It's been a while since we talked about a 70 strike in anything more than kind of a joking fashion, and yet now this week, all of a sudden, that 70 strike is within spitting distance. June 70s doing 24,000 contracts this week, 7,300 going on Wednesday, 6,000 on Tuesday. The rest split out throughout the week. Total, actually, again, slightly opening, about 700-800 contracts opening. So a lot of back and forth on that 70 strike in June as well. So it's kind of interesting to watch the push-pull of the different strikes and what is active, what is hot out there. We'll do our quick little cursory scan throughout the rest of the quick strikes, see if any funky strikes are coming up on our radar. If you're on the bearish camp, you're not alone. Someone was playing out there in the June 2019 38. Yes, 38 puts. Pretty active. Actually, 3,000 of those going up today, so we don't have OI numbers on that, obviously. But 3,000, someone playing in the 38 puts in June 2019 today, 3,000 times. So if you're saying, what's all this crazy bullish stuff going up here, or these near-term puts, don't worry about it. We got some out-of-the-money puts. And if out-of-the-money calls, let's say the par strike is more your game, we got you covered out there as well in both Dece of 2019 and Dece of 2020. The par calls doing about 2,250, which makes me think, let's see, Thursday on the 2019. Let's also see the pars, bit maybe of a calendar spread there. Yes, Thursday on both. So I'm going to guess those are probably related. Bit of a calendar or perhaps a time stupid, depending on how you're looking at it. Mr. Nick will look at the block stuff. He'll know a little more for us in a bit. But still, a lot of action on the pars in Dece 2019 and Dece 2020. Someone got a one-year spread on there, which is kind of interesting. All that brings us around, Mr. Nick. We can mention at the top of the show, it was a good week for crude bulls. It was a good week for crude vol bulls. What was catching your eye out there from a vol perspective, from a skew perspective, and anything else that was just lighting up this crazy week in crude, sir?
Well, I think the first thing to mention is, we've been talking lately, at least the last couple of months, how the vol, the at the money vol, if it swings along the volatility curve, and trying to take into account whether the change in at the money volatility was due to the fact that it's just traveling along the expiration vol curve, or whether it was actual bid that took place. So this week what we saw is we did move along sort of in the path of the vol curve, but we actually saw that vol change. To me, this week is a real vol change. So there was a firm bid in the volatility, not just a change in a location on the month's volatility curve. The other thing that sort of has caught my eye, and again, this goes back to what Tracy said earlier in terms of sort of a petered out in terms of the rally. If you look at the June, July, and August volatility curves, were really sort of balanced. You get that classic sort of volatility curve smile. So from my standpoint, when you start to see that kind of stuff, you start to think that people are not really, there's not necessarily a bias in one direction or other, and we're thinking we may just trend around here for a while. So from that standpoint, when the curve starts to look like that, maybe it's time that we may not see an increase in the volatility going forward here, especially if there's not a lot going on that's going to affect the price outside of what we saw this week. So I'm seeing a balanced curve, and that balance came about with the calls getting bid and the puts getting offered. So we saw that, that's what we spend our time looking at, right? So if you look at the delta curve here, we definitely see a shift in the delta curve. So we saw the call side kind of, you grab the tail of the volatility curve and pulled it up, and so we flattened it out. So you're seeing from a 25 delta to 25 delta, you're seeing sort of, it looks like a soup bowl. So you're kind of flat from the 25 delta to 25 delta with a little bit of a lift, at the edges there. So you're holding the soup in there. So we have balanced volatility curves, a real vol bid this week, and sort of, all the quick skew numbers. At least, we look at, I tend to stay, June and July, 34 and 63 days respectively. Those are a pretty perfect smile at this point, with calls definitely getting favored this week over the put. So we saw some change in direction there a little bit. That's kind of the biggest thing I think that has made a difference, just the call bid and the put offer, but really just the balance of the volatility curve more than anything else. And, when we look at the term structure here, if we look at June, July, August, September, October, November, December, we're within a range of, a half of all percent. So that, if that's the case, then it might be time to take advantage of this as an opportunity to sell some volatility. Now, I know the market's done for the day, but we'll see what happens over the weekend on the Sunday open, and then to see if we continue through here. So, I, again, not knowing anything other than what I look at the numbers, it might be a chance to sort of sell some stuff and take advantage of that little boost that we got this week.
I like that. Sell some stuff out there. Well, it's been a while since we've said you could reasonably and reliably sell some crude vol, but maybe this is the level. You're right. It has kind of spiked up, and we've seen pretty much in the past just about every other spike in crude vol that we've seen has been short-lived and met with a pretty pronounced retracement shortly thereafter in the sessions later. So probably not a bad wager, and we're certainly at the upper end of our recent range in terms of near-term crude vol. So maybe an opportunity to profit on some retracements there. Tracy, obviously, crude is your baby. This is your wheelhouse. So before we wrap up with crude, I'll give you a chance to give us any last thoughts you have on maybe this week's move, or what you're seeing out there right now, or the futures or the options, or perhaps even maybe what you're looking at for next week from a crude perspective.
Well, I think that, you've noticed a giant increase, and I've been watching that too, on those 60 puts. And, when we're this stretched, the odds are, we got to let a little bit of air out of this market, and so I think that's what traders are looking at. At these levels, you'd be crazy not to, to buy some puts or sell vol, however you want to approach it, because we're a little bit stretched here. And generally Mondays typically tend to be bearish. So I'm looking for next week to get a little bit of air taken out of this market, unless we end up bombing the Middle East. Hopefully we will not. But aside from any geopolitical risk, I think that, and I'm starting to see it in the volume being traded too. I mean, we had an update today too, but there was no real buying. So I think this market's about ready to take a little bit of a breath.
Yeah, and along the same lines, Trace, if you've listened to the show before, but my take on something like that, you said at this level, buying puts, essentially the same thing. And one thing I've always sort of done throughout my time trading is to look for a run up like this, and instead of maybe buying a put, I'll buy calls, especially if they happen to be on the cheaper side. In this case, it may not necessarily be the same recipe, but I'll buy calls and then hedge them or over hedge them, because
right.
You expect a retracement. So now you can sort of use an option to scalp your futures as well. So I like these sort of pushes towards the top or moves towards the bottom, because then you could really you can use an option and gamma to trade your futures more effectively, and then maybe get, if something bad happens, you still have the volatility to support yourself. So.
Right.
And looking here at some of the other product categories, we got to squeeze in a few more here for the week. We did ask our audience, and you guys obviously have some thoughts. We asked you what you want us to talk about this week. We gave you 4 choices. We gave you crude oil, which we already hit, gold, S&P 500, or Bitcoin. I have your votes here, so I know how you voted. But Tracy, you're our guest, so I'll give you pride of place. If there's any of those other product categories, maybe a little gold and metals, maybe a little bit of S&P or indexes, maybe a little bit of crypto that piques your curiosity, now is the time. Have at it, madam. Let us know what you like.
I trade a little bit of, yes, I don't trade gold, but I follow gold, obviously, just because I pretty much watch, all the commodities. I don't really trade crypto. Can't really help you out there. but yes, and gold, definitely.
All right, maybe we'll do a little bit of gold, because that's been an interesting one from a vol perspective this week as well. So let's pull that up again, listeners. You guys can follow along, cmegroup.com/Twifo. And the gold bulls already happy this week as well. Maybe not quite the crazy gold bugs who always wanted to go up 100 handles a week, but we got 10 handles. Take what you can get. Gold closing out the week, 1345, up about 10 handles, a little bit shy of 1% out there. This is a product that, again, we're seeing some. We talked for a long time on the show about how gold vol was at or near, around 5-year lows. So we're starting to see that come off now. We're up a couple of handles out there in the GVZ, which is the gold VIX, and we're seeing a couple of handles out here, or at least a handle or so, depending on where you're looking on the term structure out here in the big COMEX gold contracts here as well. So vol coming up. So if you've been listening to us for a while saying, gold vol kind of cheap, worked out for you pretty well this week. In terms of paying the rent, the vol's up, the underlying's up. The gold bulls are certainly happy out there. In terms of net OI, up pretty strong actually this week, about 5.5%. It's a pretty decent week for gold. And in terms of where the action was out here, it was in the June contract, number 1 with the bullet, 1,400 calls. So the gold bugs can't get enough. We're at around 13.5. They say that's not enough for us. We want to get to 1,400, slinging about 16 or almost 17,000 of those bad boys this week. Pretty much a tie between today and Wednesday, both doing right about 6,000 contracts apiece. Most of the rest coming on Thursday with about 3,800 contracts. And actually slightly closing, so a lot of back and forth on that 1,400 strike here in gold this week. Everyone had to have it out there. That was where the lion's share of the action was. And we kind of skip around a little bit here, which is always fun out here in good old gold. It wasn't all just 1 month. It was also in May, and also the 1,400s, also lighting it up there. But roughly half of what we saw, a little less than half actually, of what we saw in the June contract, about 7,000 of the 1,400s going up in May. The lion's share kind of tied again between Tuesday and Wednesday, about 2,100 to 2,300 on both days. The rest kind of scattered, most of it on Thursday, actually, about 1,700. Net closing on this time, about 1,400 closing. So a little bit of a paper coming off there in May, which is kind of interesting. Then we jump back again, and for our number 3, actually, we jump down a bit to the 1360s. They're pretty much slightly out of the money 1360s now, doing about 6,000 contracts this week. The lion's share coming on Wednesday, about 2,300. The rest kind of scattered throughout the week. Net slightly closing, so a lot of back and forth. A little bit of a cage match there on the 1360 strike as well. Also saw action on the 13 halves. So those are pretty much very close to at the money right now. About 5,700 of those going up this week. The lion's share actually yesterday, 2,200 net on the week, closing about 1,000. So interesting, as we got rallied towards that strike, I actually saw paper coming off a little bit there, which is perhaps surprising for some of you out there. And rounding out our top 5 here, we go to the 14 quarters, back again in June, doing nearly 5,000 contracts this week. The lion's share coming on Wednesday, 2,600 contracts going up then. Actually, strong opening here, about 2,300 contracts net opening on this strike throughout the week. So a lot of opening. We had slightly closing on the 1,400s, and then strong opening paper on the 14 quarters here. All of that in June. So much for one narrative out here in the gold and the shiny stuff this week. Let's look really quickly. We always find some funky paper out here in gold, and that seems to be the case again. Usually it's funky, far upside calls kind of what we got going on out here this week as well. You get all the way down to June 2019. Someone slinging 1,000 in the 19 halves earlier this week. Opening for most of that out there as well. So if 13 half wasn't bullish enough for you, someone loving the 19 halves in Dees 2019. 18 halves also getting some love, doing about 700 some odd throughout the week. And if that wasn't quite bullish enough for you, actually, we kind of missed this one. This should have made it into our number 2 or 3 of our top 5, actually. Got so far down the strike chain, it wasn't on the page. But it was the Dees 2019 2,100 calls. Doing some size out here, doing nearly 6,000 contracts, 5,700. That would put us squarely in pretty much our 2 to 3 camp for our top 5. Pretty active contract, 3,300 on Tuesday, 2,400 on Wednesday. The 2,400 on Wednesday is interesting because the 1,800s also did 1,200 on Wednesday the same day. So I'm wondering if there was maybe a 1x2 that went up. That 1,800, 21, 1x2. Either way, 3,300 net of the 2,100 is going up on Tuesday. 5,700, 60 on the week. About half of that opening, 2,740. So interesting. We don't have the OI numbers on the Wednesday stuff. So interesting there. A lot of outlandish, far out of the money bullish paper. Mr. Nick, what caught your eye out here? Obviously, gold vol up. So that's an interesting narrative. What's catching your eye from a skew perspective? And also, did you happen to see these big blocks going up in the far off calls here? Am I right? Is that a 1x2 or is that something else afoot out there?
Well, I'll pull up the block trade tool so we can take a look at that while I'm getting myself ready to answer your question here. I mean, as far as the quick skew goes, we definitely saw a little bit of a shift this week. And again, it's probably more along the line of rolling up and down the vol curve more than anything else. And I'm going to take a look at that right now just to be double sure. I was looking at so we, as we rally, we kind of moving up the vol curve, the way the shape of the curve is right now. So I don't know. We did have a little bit of a bid, but I think we also got much of our move as part of just sliding up and down. That little, if you put the marble in there, it's sliding up and down, give it a little push. I think a lot of our vol was just basically with the push up. So that's going to cause our quick skew to be more bid to the calls and have the puts see a little bit more of an offer. So, and we saw this, and the shapes are pretty consistent throughout the term structure of the individual vol curves, I think. So, nothing truly spectacular there. I mean, and if you look at the historical, we're still sort of trending along a cheap volatility range here. So as much as we saw a little bit of spike in the last couple of weeks, we're still sort of really, if you looked at it from a really long-term perspective, when you put like the 5-year chart out there, we came off some very high highs and we're really just sort of rangy and trending here. And we said all along, gold is one of those things where for a long time we were at a certain place. Now, again, we're at we're within a range, and we can do the cop out range of between 1,300 and 1,400, which is really what it is. But when you start, and it's really probably tighter than that. But if you use the June contract, since that is the contract with the most open interest, and you take a look at what's there, you have by a mile, you have the 1,400 calls have the greatest open interest in that contract, and then the 1,200 puts. Now, you can also look at the 1250s and the 1300. So if you really look in that, you have a lot of, it's going to take, I think you have some real resistance points at like the 1375, and then the next would be the 1400. And we can get those kind of moves in a day. But even 1350 as sort of a downside barrier. So, a bigger range, 1300 to 1400, sort of a tighter range, 1350 to 1400. And again, probably even bouncing between the 1350 and 1375. So, a similar thing. If we keep kind of rolling around in this range, you see any kind of vol bid, the vol is going to be what some people term as local vol. You just kind of swing it up and down on the vol curve without there really being anything there from a increase in premium. But in that kind of situation, you can buy some. Excuse me, I'm going to sneeze. You can buy some options, and you could scalp, especially given that we're seeing the thing bounce around quite a bit. So always like watching gold, always like watching crude, because the ranges really do come into play from an open interest standpoint.
Tracy, obviously you mentioned you watch some gold, some shiny stuff as well. Nick and I just broke down kind of all the options action and the volatility out there. What's been catching your eye out there in gold of late? Are you buying this rally? And what do you like to trade out there in gold? Are you futures, a combo of futures and options like you are with crude, or some other mix therein?
No, I just watch gold. I don't actually trade gold. But since it's, since it's very governed with the euro and the dollar, it's kind of, metals and energies are kind of very similar in a lot of ways, even though it doesn't sound like it. So I always have metal screen up as well as the energy screen up.
Well, there you go, listeners. You got a little bit of your gold in. And speaking of listeners, you guys have been busy firing off your questions for us. So let's get to it with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback, the portion where you guys take the reins, questions, comments, insights, pearls of wisdom. We welcome them all. We actually asked you guys at the top of the show there what you want us to hit on. We gave you choices: Bitcoin, crude oil, S&P, and gold. Crude and S&P tying with 27%. Bitcoin actually taking around 37%, 9% for gold. So we'll get in maybe some of your crypto theories in a little bit. We got a lot of good questions. Actually got some here since Tracy, you're our guest. We'll get some that are in your neck of the woods, your wheelhouse, which is crude. Let's start off with this one. This comes from Ken Aidan. He says, "I'm a crude swinger." I hope he doesn't mean that in the literal sense. Mostly trading short-term direction intraday in the futures. He wants to know, are the options good for this use case, or is that more for long-term strategies? This is the question we get a lot. We get asked a lot about the use cases for options, particularly intraday. That's why I wanted to pick your brain about that at the top of the show, Tracy, because we get this question a lot. Clearly, you told us your use case, so I kind of think I know where you land. But what do you have to say here for our listener, Ken? Do you think options are good for intraday in crude, or you prefer the futures for that use case?
Oh no, absolutely. You can flip options too during the day. If you're looking for, any kind of move, I mean, I day trade options all the time. So, absolutely you can do it. You can either do it directional, you can, I know a lot of people that buy straddles or strangles and play it that way, or, outright directional, puts or calls. But people day trade the options in the crude market all the time.
Yeah, we said that before here on the show. There is a good use case. You can intraday and day trade options. It does happen. It does exist. A lot of people like to use longer term use cases, but people trade them intraday too. Nick and I, you and I have talked about this quite a bit on the show before. Anything else you want to add for our friend here, Mr. Ken?
No, I think that's kind of what I was getting at with Tracy early on about the weeklies. I think if nothing else, as those become more liquid, and then as the regular contracts get to be shorter dated, you can really start to treat. And I like actually hearing Tracy say how people are buying straddles and doing other things to support or to defend their position, because that's really what it's for, right? And it's always interesting to hear that they're out there really doing that. But I still think that once the weeklies become that where we can really get some good markets and the decent liquidity, then you just especially for the shorter dated ones, you can treat them like a binary options, right, Trace? I mean, it would be a real easy way to sort of just like flip a coin.
Exactly. So, I think it's, just a matter of people, the market getting just a little bit more liquid. But, I always say I wish the weeklies were a little bit more liquid because they'd be a lot easier. It's a lot easier to, intraday trade them. And they're a little bit less expensive too.
Another question here from Luke, also in the crude realm. Luke T, it's kind of funny one actually. He says, why does USO suck so badly? Not sure why anyone would trade this over the futures. I like that. That's a funny one. So Tracy, answer for Luke. Why does he say at least that USO is terrible? We've talked before about some of our issues here on the show with USO. You're going to get into these issues whenever you have these kind of aggregate hybrid products that are attempting to replicate something else through a basket of something else. In the case of futures, there's always going to be roll yield issues and things like that. But from your perspective, Tracy, are you a fan of USO? Are you not a fan? What do you think? Do you agree with Luke T that it, quote, sucks so badly?
I'm not a fan. I don't trade it. I don't trade any ETFs because you get screwed on the roll, basically. So, it's not something that you can hold for any length of time if it's going against you, or I just don't like ETFs. I have to be honest. So for the same reasons that you have already stated, I mean, the major problem is the roll.
There you go. You're a futures girl. You're a futures girl for a reason. Yeah, you're right. That roll really, really eats into you. It's kind of hard. You can't put USO in your IRA and set it and forget it because, spoiler alert, it won't work out too well. Not quite as bad as let's say a VXX, which will erode to zero, but it won't quite give you the same performance that you're looking for out if you had let's say a WTI future in there or something along those lines. I don't know, Mr. Nick, any additional thoughts you want to add here on USO or just the ETFs versus futures kind of debate?
Well, I think there was another related question in here. I think we jump into the Thomas's question because I could tie both of my response into both of those.
Okay, sure. I'll read that one too. We got Thomas F. He says, I used to trade a lot of SPY options, but I've been lured over to the eMinis. Not sure why more people don't trade these things. What do you think it is that keeps people trading SPY instead of the eMini? What can be done to bring them to the dark side? So you're right, Mr. Nick. A somewhat analogous question here on SPY as well. What do you have to say for Thomas F. and Luke T?
Well, I mean, first off, I think from my own perspective, like I always say, is as much as I have a futures and futures options experience, get that market still seems much more difficult, I guess, from because of the margin calculation and how much you have to have in your account and all that kind of thing. Whereas the SPY and the USO you can treat like an equity, right? And I think it's probably just because it feels more familiar, the other two. And agree, I've heard, I haven't traded USO, but my friends that trade USO, they hate it because of the roll. And the SPY, if the one thing that people probably don't realize is that you can probably be more efficient with the eMinis if you go look at the total cost analysis tools over on the CME Group website. You can go over there and see what your cost of trading is. You're going to see you're better off being an eMini. So I think that I like hearing Tracy say that she hates the USO because it just makes sense that the liquidity in the crude on the CME is just so much better, and the fact that there's all kinds of other stuff that you can do, and you actually can do options that tied to the underlying that will really hedge your position or trade with your position. Can't do that with the USO because people ask us about that. Can I do my options against the USO underlying? And typically it just, I don't even know how you do that.
It doesn't work. You can't really do it. It just doesn't work that way. I mean, it doesn't, right. You just can't.
Yeah, it'd be nice if those things worked out that way. But you're right. There is that convenience factor, and that drives a lot of volume in the ETFs. They can put them in their traditional equities and securities account, and they don't have to open up a futures account. And so that used to be much more of a problem a few years back. A lot of the brokers have done a great job of really making that process pretty seamless. Click on a couple of buttons, and now you have a futures account. And you don't even notice. It's not, you used to have to go to a separate site or a separate section to do it. Now it's all kind of seamless. All one looks like one account, even though effectively it is two. So they've done a good job of making that easier. I think that's helped to eliminate some of the barriers to entry. But there are still some people out there, but that's just too a bridge too far for them to jump into the future. In which case, you're listening to the wrong show. But we'll let you listen anyway. One more here for you, Mr. Nick. This one's right up your alley. I'll let you handle this one. This comes from your old buddy, Mr. Brandt. He wants some very specific data from you guys out of Quick Strike. He says he's partial to selling 45-day straddles. Does Quick Strike highlight the highest implied vol straddles of the CME products? It would be cool to sell the richest straddles daily. He wants to do it daily. 45-day straddle decay is a universal sweet spot to avoid gamma risk, but only at implied vol extremes, and even then one can lose a little. Span margin is ideal for CME straddles. I will gladly pay for 45-day straddle IV reports. Rich straddles are an edge. So there you go, Mr. Nick, a customer willing to pay for new functionality. What do you think?
Yeah, I did respond back to him because there's to me, and there's only one problem with that. We do 30 and 60-day stuff, in particular with Quick Skew, but we can generate that report for that at the monies. On the 30-day and 60-day constant maturity very easily. So two things is you can't necessarily always trade a 30, a 45, or a 60-day straddle, but you can go find something that's close to that, right? So there's always going to be a hybrid to that approach. But we can absolutely generate those reports. I mean, we can do them right now. I had something in the queue for the 30 and 60-day. We'll have to do a little work to get a 45-day calc in there, but yeah, those things. I think what I'm seeing now, we've done our best to sort of give people the information that they need to help them make decisions. I think people want even more where we even tip them in one direction or other. Now, we can't necessarily do that because that's not what our job is, but we can start alerting people with particular reports for requests that they have. So feel free to ask. And typically you receive, we put it in the list, and if we can knock them out quickly, we do. So, but that one should be coming not so far off because we can do the 30 and the 60, like I said, fairly quickly, and that report's probably almost there from an at-the-money standpoint. And but then at that point, you're just gonna have to still make decisions on which option you're gonna want to participate selling because you're not going to get the perfect match with your 45-day days to expiration.
There you go, listeners. Ask and you shall receive, even if you're on some esoteric data kick. Everyone wants different data, Mr. Nick. They only want to sell 38.5-day straddles. What do you got? What do you got for those people? But see, ask and you shall receive with the data. Unfortunately, don't ask for more show because that music means we're done. We've come to the end of our epic sojourn through the world of futures options. Hit on a lot of crude, touched on some shiny stuff and a few other areas, the myriad nuanced differences between ETFs and futures and all the other fun stuff you guys have on your brain. We didn't get to all your questions. Keep them coming. We do love hearing from you guys. We read them all. We try to respond to them all. If not, don't get to all of them on the show. But you get your answers one way or the other. But before we go, let me go back around the horn. Let's start with our guest, Tracy. You get pride of place. If our listeners are intrigued, they want to hear more of your thoughts about the crude markets, where should they go? What should they do?
I'm on Twitter at ShyGirl, and I also have a blog, shygirl.com.
There you go. That's CHIGRL on Twitter, and I believe it's the same on the blog as well. Yes, GRL on the blog as well. I noticed you haven't posted on the blog since like January, Tracy. You gotta get that going again.
I know I'm terrible.
Content's hard work, isn't it?
I know. Seriously.
Everyone thinks this job is easy, but it takes some time. All right, and Mr. Nick, last but not least, sir, you just mentioned your cool new 45-day straddle report. If that's not enough cooking, what else you guys got up your sleeve over there in the land of Quick Strike?
Oh, well, like I said we work towards getting something out there. I think we can get the 30 and 60-day right away for them. I mean, in terms of our next build. But what else we got cooking? Like I always say, point everybody to the free stuff first. Take a look and see if there's any more detail that you need, and then come on over and check out the subscription-based stuff. But we'll be putting out some new economic calendar tools that are tied to the CME Group option expirations. So you're able to look at both of those at the same time. So that will be coming out fairly soon. So you'll get a calendar of events, and then to one side you'll also see all the expirations that are associated with those particular economic events. So there's going to be some really good practical tools coming out there, and if you haven't looked at it yet, you can go take a look at the strategy simulator that the CME just released. That is a tool we built that's out on the CMEgroup.com/quickstrike page. But as always, give the tools a look. There's something for everybody, even for futures traders only. You can use options information to trade futures, so you got to keep that in mind.
There you go. Check it out, Bantix.com, Bantix.com, and click on the check out Quick Strike link there. You can see it for yourself. Of course, our friends over there at CME Group, head over to CMEgroup.com/Twifo. Click around there. Maybe check out some of Blue's videos, Eric's, all the rest of the content they got floating around over there. Some of the great futures education. You got questions about futures versus ETFs? They got some content for you over there. Check it out over there at CME Group. And on behalf of Tracy, Mr. Nick, our friends at CME, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, sending in such great questions, all the other fun stuff that you do. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at Bantix.com. That's Bantix.com. And don't forget to follow us on Twitter at QuickStrike1. That's QuickStrike1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.